How you guys doing? This is Camille from PIK, Exmo Study. PIK stands for patience is key. You got to be patient in these markets because they move fast, and the way to counter that and get the best out of them is to stay humble and patient. Also, stay vigilant. Look for opportunities. Check out my little tag there, PIK at PIK Exmo Study, and I have OG Bitmap Inscriber because I was there in the beginning. You might be familiar with all the Bitmap hype. They're $60 today. And I inscribe bitmaps for $2 a piece, so you can easily calculate the multipliers. Anyway, just wanted to throw a little brag there. We're here to do technical analysis, talk about the markets. So, waiting for John. John is coming. He's letting his dogs in because he's a family man and he also likes pets. So you can trust this guy, especially when he's in crypto now. He's not going to scam you. He's going to tell you the truth. Just like me, very honest. So let's get it going. Yeah, we're gonna show you what's happening. I'm surprised by this Bitcoin bounce back, 3% up on the daily. We have a nice bullish engulfing candle on the daily. That was a bear trap, wasn't it? I'm gonna ask John. I think we can call that a bear trap, a little fake out to the downside. As we say, November new money, December for. Doesn't want me to say that. Be politically correct and say December Christmas cash. Okay, you probably know what I wanted to say. Yeah, so don't get caught up in the hype in December. Like I got my notebook there. I'm old school like that too. Wrote down all my alts positions and everything, and I'm gonna keep crossing them out because I'm about to cash out on these alts and wait for the dips. Did you see how stretched the alts are? They're insanely stretched, some of them. I'm not talking about Caspa, Solana. I mean, I'm talking about these like lower quality alts that have no reason to be pumped like that. It's not alt season yet. We're gonna look at Ethereum to Bitcoin for the gauge. We're gonna look at different metrics here, I assume. So we'll give you an overall view of the markets and say what to expect. Obviously, we're gonna cover some top coins. Maybe cover some sleepers as well. Yeah, so no further ado. You guys are waiting for the charts. You're waiting for the fireworks here. So let's go. I'm gonna share my screen. This will be in my other browser. Let's take a look at the overall markets now. Give me a second. I will present. Gotta go here. Okay, take a look. So, as you can see, can I move myself here? Maybe like this. You don't need to see my face now. What's important are the charts, all right? So, we have Bitcoin up 6.5%. That's good. The price is 37. Is that live? Last time I looked, it was only 36.9. Okay, it is. It's moving quite fast. Nice little V-shaped recovery. Look at this little thing we have here. Little preview window of the price. And if you're a seasoned trader, you look at just that, really, like before any other detailed charts. You just look at that little 7-day window and you know where you're standing. Okay, John's up. Hey, let's welcome our co-host, Mr. John at Expo Study, PIK family. How you been doing?
Good.
And I'm just looking at the top coins here on CoinGecko. I said I was kind of surprised by the Bitcoin pop, 6.5% at one moment. Was it a bear trap? Was it like a little fake out to catch people off guard and everybody started selling, or what was it?
Yesterday. Well, the print came in lower. The inflation print came in lower yesterday. It's actually been the lowest in 13 months.
Okay, so you got the macro knowledge. I was kind of busy. I didn't even check that. All right.
Well, and if you remember, if they would go back and again subscribe to our channel here, hello, John. If you would go to our video we did 5 days ago, you would see that we addressed this actually right up to the point of when we were talking about micro factors and how we did a chart on the yields. And with the 2, 5, 10, and 30 year, when they were at 5%, they act as like another interest rate hike, if you can remember us talking about.
Yes, I remember.
And that's exactly what happened. So as the yield was coming up, they decided not to raise interest rates, but they acted just like another interest rate hike. So they have indirectly brought down some inflation measures.
Okay.
Now, saying all that, it still doesn't change up a lot of things when you're looking at does rates need to stay higher for longer? Rates still need to stay higher for longer.
You're saying, I remember you saying that we're expecting a rate hike that's coming up.
Well, but again, with when you have, when you have them inflation pressures releasing, that's been over a 13-month time span, generally they'll follow along with that and probably not raise. I think it's like 100% bet now that they're not going to raise in December.
Oh, okay. All right.
So,
is there a chance for you to switch your mic, please?
Because I just did.
Oh, yeah, right there. Very good. Thank you. The sound is much better now. I'm just looking what is strong against Bitcoin and the standouts for today. If we go from the bottom here, Ordi, I'm gonna just say things that are above 10%. Cake, 19.5, above Bitcoin. This is in relation to BTC. SNX, Synthetics, Render, the strong performers. Thorchain, Rune, very strong. Caspa, the leader, 21.5. Chronos, 15. Then you got AVAX, and almost Solana, 8.7. So we just told you the strongest coins currently in relation to Bitcoin. Out of these, do you have anything to say about levels, about prices, any technical insight here?
Well, when I was looking, of course, this is what we always do to find out which ones are going to pull ahead first on cases just like this. I was looking at AVAX. Of course, as you know, I've been watching AVAX uber close ever since basically $11.50 broke, $11. And of course, I put the signal out a while ago for it to hit $22. And the beauty about that is if we can get over $22, you're looking at $28. So AVAX has really been catching my attention here lately. Caspa, it's hit the 261 fib extension that we highlighted in our private Telegram chat.
Yeah, hit that Telegram chat. It's really fire. Like we were. I'm sorry to interrupt, but I gotta interject this. We are in the process of finishing our portfolio for that Telegram with our calls, and I'm blown away. I mean, I wasn't even tracking that so closely. I knew we were kind of doing good, but like the results are coming in, and guys, if not here, then somewhere else. You just catch us and you stick with us, all right? Because as I said in the beginning before John joined, we're just honest, we're genuine. If I say these, it's on me. It's I put it on my heart. I'm not lying to you. We'll probably post or something, right? Do you think we can post that portfolio? Right. So when we finish, you guys will see all our calls and the history of these trades, how they've done. I'm not saying we're number one, but I'm saying we're pretty good. Okay, now back to the topic.
No, that one's piquing my interest. Caspa, I keep coming back to it over and over. What I feel long term with it, that was the sleeper. That was the sleeper of the draft, is what I kept telling the team from the beginning, that it was the sleeper of the draft. And I'll be the first to tell you that, I missed out on a lot of the run because I was being greedy. You can be greedy both ways, and I was greedy. I was greedy to the low side.
Yeah, waiting for the retracement to catch it at a good price.
Yeah, and instead of even taking sometimes what we pass on here to people, once you're within that 15 or 20% kind of level trading, basically, I didn't take my own advice, and I didn't miss the whole run of Caspa. I mean, I caught little bits of it here and there, but something where I should have had 1,000% gain, I was able to, eke out a 40% gain essentially, or whatever. But Just like recently, when I would say short it, I'd go in there and I admit, like you said, we're just trying to be honest with you. And when I said short it's still shorted. It just didn't short to the level that we wanted it. Like when we would call shorts, we'd say 3 cents or 3.5 cents. It only come to 4.4. And then the other time we tried to short it. And then, on extensions, we had to blow off pop at, roughly 8 cents. We didn't think the markets would continue to keep picking up. But when you're racing against a fast horse, the turtle ain't going to catch up for a while. So when it drops, it's going to drop hard.
Yeah.
But long term, we really like ASPA. It's a program we've talked about here before, not on our YouTube channel, but the fair launch release of the token, which is avoids regulatory scrutiny moving forward. So there's some confidence there. Has a very similar setup to how Matic moved in the previous cycle. Where it's just a good overall project. And I don't mean to get on my little horse there, but it was the steal of the draft, and I was greedy, waiting for a cheap price.
Listen, I mean, we all have these regrets, and same way here. I kind of like I shared with you my feelings today about regretting or missing out slightly when I had the gut feeling, and I also had my thought process was in place. It was all rational and logical. I had foreseen what's going to happen, and I'm talking about bitmaps. I could have got more, no problem. I just invested I allocated my resources in different places where perhaps I could have funneled more money into this, because I kind of trusted that it will pop. Well, we all have these regrets. We have buyers or sellers remorse. But as you spend time in the markets, you kind of let it go. And see, what is valuable is there are always opportunities in the market every day. Things come and go. They trends pass, and there's the new hot thing. And when you're close to the market, you will always see something. So for now, like, there's nothing to regret.
Right. I mean, my gosh, there's. I mean, you make your own decisions, and
exactly.
years and years ago, you would have really beaten yourself up about it. Like I still have a friend to this day that he's like, he didn't take my advice years ago about when I told him to cash out, years ago in the last cycle, and his balance got up there to a pretty hefty amount when you talk about normal people such as me and you. And I kept telling him over and over, but he just wanted to keep holding. He just wanted to keep holding because, in the back of his mind, he always thought, well, every time I make a decision like that, it ends up going the opposite way than I thought. And I said, well, my advice to him was, well, even if it goes in the opposite way you thought, now you got all that money to put back in. And like, he couldn't pull the trigger. And long story short, he held until the portfolio went down like, 80%.
Could you say he was too patient, or there's no such thing?
Well, no, because it was greed getting him. It wasn't patience. There's a big difference where you're just hodl mentality to a point of you don't know when to sell. And this is why, again, if you ever get the opportunity to really see our philosophy in investing and where we come up with comments of, you're being greedy if you want to more than double your money. Now, again, if it keeps going up after that, well, all is well. You can always still buy back in with the same amount of money you pulled out, which perfect example is like Solana. When we're adjusting our portfolio here, which we're going to share once it's completed,
that was a really good trade. And I really like that. I'm sorry to cut you in, but
no, you're good.
I really like the little strategy you have implied there with Solana, because once that's the one pick, you can do things a little bit differently, and it's going to turn out really well. Okay, back to the topic. You were saying,
just like Solana. So what we did was for our portfolio strategy, because we at that moment, and this is really before the rest of the altcoins really was kicking off, Solana was kind of moving beforehand. Yeah. But the little profitable trades we had beforehand, whether it was $300, $500, maybe $1,500, $2,000, whatever those profitable trades was, we got to the point in our portfolio where our portfolio was up a substantial amount of money, well over our initial investment. Correct, Camille?
Yes.
And so what we did was we decided to employ what was called the 0% rule. And what's the 0% rule in investing? So, here's a little nugget for everybody. Let's say you invest $100 and your portfolio goes up to $120. Now you got $120 back in cash, right?
Yes.
You could take that $20 And that's your 0% strategy, because if you lose that $20, you're losing zero because it was money that you've already made. So we did this with our strategy with Solana, with whatever profits we had past our initial investment. We took it and we put it all into Solana, and we could be more aggressive because, again, you're dealing with a 0% loss strategy. You're not losing nothing because you didn't have it to start out with. So
you can comfortably trade that and even take a little loss. You're still going to be up in profit off that
Right.
trade alone.
Because it was all profit you put in to make that trade. So you can be, instead of looking for a 10 or 15% gain, you can say, okay, we can put this in at 26, sell it again at 52. We can be more aggressive. We don't have to have our sell strategy being 5, 10, 15, 20, 25, 30%. You can be uber aggressive because in the long run, you're not losing nothing. So you're still going back. You still have what you started out with.
Yeah.
Now, it turned out to be relatively nice for us, which you'll see on our trades. But here's the kicker again. It came up to that $52 level. It bypassed $52. Came up to whatever current high is now. We put another chart out again. Visit us again on our Telegram, where it said if we can hold this $50 to $53 level, swing it again. Swing it again. So here we are. We sold at $52, and then guess when we're buying again? $52. We're buying again at $52, but now we're not going to be as aggressive. We'll look for that 10 or 15 or 30, 20% gain to take us up to $66 to $75, where we feel like that's going to be our stop point here for a while, is that area. So
Yep.
That was a long story short. I apologize for that, but it's just a risk management way we do things.
The longer I'm in the game, the longer the more I think about things like that instead of charts only.
Yeah.
It's like this is the grit. These are the bones of trading. That risk management, cool, level-headed approach, and these little flips that you do. It's not about only 4-hour trend line. No, it's more about a vision that you have and a solid strategy. It really gets you far. It lets you sleep comfortably at night, and then you still wake up to a profit.
Well, yeah, because again, you put in your profit that you made from your other trades, and then when you see the one that's sticking out like a sore thumb to you, like unless barring a swan event, a black swan event, the odds of it hitting those targets, and we're talking about Solana here, of hitting that $52 target, was very high. Was very, very high. And we knew that. And like Camille said, it gives you rest at night, because you can't just think about it as in, like he said, the 4, 8, 12-hour chart. And then too many people is too concerned about hitting that sell button because they think it's not going to come back down again, or it's going to continue rising, where we just told you straight up, if you know it's still going up, it's okay to rebuy it again.
Yeah.
So that strategy really does work. I can't tell you, I think it was probably 4 different times I put my money into Solana, from the time of $14 to $26. I think I put my money in probably 4 different times, and each time was higher. I was paying higher each time, and then I finally quit hitting the sell button. My last buy was, I think, around $24.50 or something like that.
Yeah.
And the money I made from it, I put right back in yesterday when it hit 50. I placed just a small order, just a very small baby order. I made what we call a web. Oh, okay, so you got a 0% strategy in trading. You also got what's called a web of orders. Right?
Yeah. You line them up or down from a certain level, and you keep going down in increments, right? And whatever you catch on the wick, then that's yours, right?
Yeah. So what I did was I took just $100 is all I took, because again, we're not here to catch the bottom. We're here for verification. So I just took the $100 and I spread it out over 4 orders between 49 and 53. I just spread it out.
Right.
And it stopped. And I noticed as soon as it stopped, I noticed some indicators were showing that we were going to have some more continuation. So I allocated a little bit more of my capital. And then I didn't look to see how high it could go. Yes. Can it go to 66 or 74? Yes. My goal wasn't to get a 66 to $74. My goal was just to flip it for 10% real quick, because I knew the volatility was going to be up. You know what I mean? So within hours.
When you're talking in depth about this strategy, I go back to my Forex days, like 13 years ago, and I think about how this is comparable to a trailing stop loss. Okay, so we know that prices move in waves, and we're able to capitalize off that because there's a wave one and the wave two is a correction. That's where you rebuy for a verification in the strategy that John was detailing right now. Now, I had this idea of comparing that strategy to a trailing stop loss, where, for example, you would manually raise your stop loss just below the wave that was the corrective wave. So you have wave one, wave two, and you set the stop. When you see wave three starting, you set it below wave two. You know what I mean? And you keep pushing it up. That's a different strategy. It's also great, but the advantage that I understood when you were describing it from your strategy is that you take out the money and then you decide when to put it in. It's not like with the stop loss, you keep the money in a single asset and you just wait, because the advantage is when you see another asset moving faster or there's a sudden breakout or something, you don't have to keep your money in Solana anymore because you go to the next one. You know what I mean? So it's a more dynamic approach. It's a more flexible approach. And that's why I like that more, and I apply it too, because it just gives you more options. And it's all about keeping your eyes open and staying alert in these markets, because you see something breaking out, something popping, and then you go for that, even at 10%. All right, that was my little spin.
Well, no, I'm going to bounce off of you here, Camille, because we'll make this like a little knowledgeable segment here.
Yeah.
So people will say, but everything's popping. How do you know which ones to pick? Yeah, and where people make their mistake, and I think we've all been in this boat at one time or another, whether or not you made money off of it or you haven't made money off. We've all been in this boat. The famous saying is you don't want all your eggs in one basket, which is true. But what happens is when you're trying to put your eggs in 50 baskets, but you can't keep track of 50 things. So what you should do, and here's like number 3 for like you say, rebuying versus trailing stop losses. Number 3 on this little thing is hyper focus on 5 or less. So you get into these hyper focus stages. So I was just talking about AVAX, correct?
Yes.
So where do you think that little 10% gain I made from Zoll went back into?
AVAX.
Exactly. Because everything was pointing to, we're going to try to come up to $22. It's been pointing that way. And this is the 3rd time I put money into AVAX. Because again, when you hyper focus on certain tokens, you don't have to revisit it 3 days later because you know the levels.
Yeah.
So you're training yourself all along. Link, let's use Link for example. We said Link had to hold 1350. Where did it come back to? 1350. So you could play that up again until 16 to complete the 450 to not the 470 to 950 range is 91%. So you could play it all the way up to $18 here potentially, but you're buying it again at 1350 instead of buying it at 16 or 1650 because I already trained. Yeah.
It's like a small masterclass. I'm thinking here. Really, this is valuable information.
You just hyper focus your attention on certain ones, and then once you learn the levels, when you go to the next one, you already have them in the back of your mind. So now I don't need to look at a Link chart to know what I need.
Yeah.
Like I know my sell for Link right now rested around $18. Now, let's say it only comes up to 16 again, and the markets start to tank down. I'm still up. You know what I'm saying? I would still be up roughly 20% but applying the 0% strategy, I'm up no matter what, because all the money I'm putting in right now is money I've already made. And where people hodl, and this is why I really don't like the hodl philosophy. I'm not a huge fan of the hodl philosophy, because you can balance yourself with strict guidance on how to grow your hodl stash. You hodl when it's all profit.
Yeah, I love it. I love the recap and you know the puenta of this thing. That's what I was saying about bitmap flipping in my video. It's like somebody in a group said, "Why don't you just buy and hodl?" Yes, I have a stash for that, but I have a separate wallet just to flip it. Because look, it even goes beyond any egoistical, logical schemes. This is like, you are part of the market. If everybody hodled all the assets they have, nothing would move.
Right.
That's not the, you know what I mean?
Yes.
I wouldn't sell my NFTs, wouldn't sell my Bitcoin, and everybody did the same thing. We would have a dead and dying market. Things have to move. So it's like you're being altruistic. You're bringing something to the table when you release this energy and when you let the market do its own thing. So from that point of view, it's kind of like philosophical in a sense. But from that point of view, I'm happy to be a participant of the market. And I don't like hodling either, because to me it's just boring. I know people who maybe don't love the markets as much, so they can hodl, but we love the markets. We like to see this, in action. So for us, like, this is fun, and this is just profit as well, So that's my take on it.
Well, by creating the strategies, and again, bouncing off of you here, by creating these strategies, what you're basically doing is now you have got your risk management down to zero, because all your initial investment is out. And you can even go back into our videos and see where we've said that, hey, was we in the last 2 weeks of love here for the market? And we're still not out of that. As evidence, are we on a full-on, altcoin market? No, not even close. Like, people is not going to understand an altcoin market until they really see it, how much prices really just go through the roof,
Yeah.
And we're not there. See, it says it right there. I mean, this is nice that it actually has a chart that tells you it's not there, but until we get real clarification of the ETH Bitcoin pair, we're not going to hit an altcoin season, and we'll probably keep rejecting until we finally get some clarification there. Once we get some clarification in the ETH Bitcoin pair, then we're ready to rock,
Yep. So
then we'll make a video. We'll say, guys, buy your altcoins and hodl. And hold them if you don't feel like trading them. Hold them till the peak, which is roughly 18 months or something, somewhere in 2025. Just hold on to them. But here we are.
My trading view is messing up. What's happening? I wanted to go to the ETH Bitcoin chart. If we can't go to trading view, we're gonna go somewhere else. Yeah, this one's working. So it's trading view that has a problem. Maybe everybody listened to us and they want to see ETH versus Bitcoin now, how it's moving.
And I'll be the first to tell you that, like, when I first started trading, I could never understand the whole philosophy behind trading to the Bitcoin pair. And it took me a long time to really, one day we're really going to have to maybe make a video one time on the importance of trading to a Bitcoin pair,
Same here.
Understand you really got to know the nuance of the market to understand and appreciate when it trades to the Bitcoin pair.
Yeah, it took me a while too. It just felt weird talking about something to Bitcoin. But when you understand that Bitcoin is the native currency of the crypto market itself, it's like the dollar here. So when I wake up in the morning, I have my charts, the coin gecko, whatever. It's to Bitcoin, So I look at XRP to Bitcoin. Everything's to Bitcoin because I want to see the outperformers. Bitcoin is the benchmark, and then you are looking for something stronger than that, obviously. So like Injective, when it broke, it was just, did it break?
I think it came back to retest its all-time high. I mean, even though it hasn't hit its all-time high in the USD pair, it has, it broke out of its all-time high on the BTC pair.
Yeah.
So I think that was at 044 or something like that, but it did come back to retest it. So this could be a deviation, and that's another thing one day we'll talk about when it comes to deviations. Like, you really got to watch out for those. And perfect example of deviations is in our last video, which, again, go back in our YouTube videos to watch the one we posted 5 days ago, but where we were talking about there could be a deviation in certain pairs that we were speaking about then, where you reject because you get faked out above a line, and then next thing you know, it rejects and sweeps its low again. So, and he has a little chart there that kind of helps you out there a little bit, but we keep rejecting the run area. We keep rejecting the run area of the pattern. So
this is not trading view by any means, but I'm doing the best I can to show you here with limited resources.
Yeah.
That trend line is key, and it's roughly at it's going to be at 58, 59.
Mm-hmm.
0.059 right here. But you see that there was a little misunderstanding with this doji candle here. Actually, that's a terrible candle. On the 10th of November, we got rejected, right?
Yeah.
So for now, it's probably like, well, here we're at support from this wave. If you want to go like this, whatever that was, 1,
Yeah.
2, 3, 4. Maybe
Yeah.
that's it for now. Maybe we just stop here and keep going higher to retest the trend line, I would say.
Well, I mean, with Bitcoin running, it's probably going to continue to drag this. As long as we hold, you can remain bullish as long as we stay roughly above 5.1.
Yeah.
We lose that 5.1 level, then you'd probably want to think about getting rid of all your alts.
If you haven't done so already.
If you haven't done so already.
Yeah. I mean, don't stretch it, guys. The market's happy. Fear and greed index. What's that going to be today? 75? 60. Okay.
Not too bad. Still in greed, but it's came back.
Yeah. Came back.
But, I mean, things of note, another thing, if you want to put it down there, things of note, another thing to look out for would be you'd want to see kind of like your hodl mentality. You'd want to see...
Where do we go? Sentiment or...
Well, you can just type it down there, but these are just like little things to help you in the market overall.
So what'd you say, hodl mentality?
Well, that's just something I call it. It's probably, I'm sure it's probably a thing for it, but is the whales holding or are they offloading? And what we do know is ever since price hit $32,000 in Bitcoin, the miners and the whales have been selling, which again, we covered in our one video. Remember, Camille, we pulled up in on sentiment and it showed where, we showed it in ETH, how the ETH people were selling ETH, the ETH whales were selling.
Yeah.
And these are all little things you can look into. Oh, yeah, see, you pulled up CryptoQuaint. All right, it's hard to see your screen. It's really hard to see your screen. I can see it a little bit, but you can get an idea here. What's this? That whale ratio. All right, so this is beautiful. Okay, look what's happening. See how you got the price there, but look at the whale ratio, how it just dipped off right there all of a sudden.
Yeah.
See right there how it's starting to drop off. And if you can go to the last, there you go. Is this updated? That's only October.
That's what they have. They don't have any. Well, let me go to 1 month. No, the last thing they have is October 16th. They were kind of low here.
Yeah. Well, which one are you on now? CryptoQuaint.
CryptoQuaint exchange.
Okay, see, look at the miners. I want you to. It should show the miners there.
Okay.
On the side,
miners
position index. Now, this will surprise you a little bit. What?
Oh, do we have subscription? I think we do.
Yeah, we do. Well, maybe that's why I ain't showing the new updates. That's why.
We're professional.
Yeah, we're professional. That's why we get the inside scoop and pass it along to you all.
Yeah. Okay. So it's just loading a bit longer. Okay. Cool. John, please explain because you're into blockchain analytics.
All right, so the first thing you're seeing here is, and I can't. It's really hard. I'm trying to look like I'm looking out over a mountain at it, but the screen just does not load very well on this.
Wait, let me make it bigger.
So you got 0 days for your EMA, and that's your daily. If you look at like your weekly for duration.
Yeah, let's go to the weekly. No, that's not good. 1 month.
No, and switch it to that pad. That's probably better too. Go to the weekly. Yeah. Where's it showing price at?
Price is the black line.
Okay. Now look at $32,000 and then look what happened to the miners. Look what happened.
Here.
Come up a little bit in November. Come up to the peak in November.
Here.
And then the other peak.
Here.
The other one.
Okay.
Look what keeps happening.
Lower.
Lower. Now we're picking back up again. But the miner reserves are not picking back up. They're pretty much selling into every little rally.
Okay.
Do you see the correlation?
Yes, I do.
Now, can you explain that correlation to them? Because you're a little bit more educational than I am.
Okay, I'll try my best. That means they want to cash out on whatever gains Bitcoin gives them now because they are expecting unsustainable Bitcoin prices into the new year. That's my take on it.
Hey, I would say you're a good assessment in very small words that you are right there. Here's the thing: once the halving happens, people don't understand that Bitcoin needs to be at $40,000 before miners become even. That's their break-even price, $40,000 to $42,000. So a lot of miners that are online right now aren't going to be online next year. And it's just like every big business out there that turns into a monopoly, miners are going to be no different. You're going to have 4 or 5 big dogs, and the rest of them are just going to be trying to survive against the big dogs because it's not going to be sustainable. Whales know this, institutions know this, and all the talk of the ETF. And this is just a little nugget out there for what I feel personally. This is all going to be a nice run up before we get a real nice sell off.
30%?
If not more.
Okay.
If not more.
That's only for Bitcoin, I would say, and then the rest is like 70%.
Yeah, the rest will be 60 or 70%. And again, that's evidence, and we're kind of showing a topping pattern too, forming on Bitcoin. And now that you're in CryptoCurrency there, look at your SOPR. There should be a thing, spent output ratio.
Yes. Spent output.
Age band. There you go. This will tell you. And if we head into the block up, it would show like who's in profit and all that. Now look at this. It's hard to understand a little bit, but kind of not. Tell me what you think when you see this. When you say it's a spent output age band, it tells you how long people are holding on for it. And I'll tell you the ones to pay attention to right now would be your 7 to 10 year crowd and your 0 to 155 crowd.
0 to 155 is like months.
That'd be day. Well, yeah, it's days, but
days.
Yeah.
Okay, you're saying 5 to 7 years.
5 to 7 years because you're developing new hodlers over time. Okay, and I'm not sure if CryptoCurrency has it, but there should be a hodl wave on here too. I think CryptoCurrency has one. But just tell me what you see when you see that, because it's like I said, it's kind of hard. 1 month to 3 months. Do you see the peaks there and how they're dropping off a little bit? The purple. Do you notice that?
Yes, I do. Yes.
So you have people that's holding for very shorter periods, and now they're holding for shorter and shorter, and because now they probably bought at 20 or 25,000, and they're rushing out of the market by selling.
Okay.
And the bigger crowd, the whale activity, which would show, is probably picking these tokens up.
So something like here, the 2-3 year crowd.
Yeah, well, it'd be your 5 to 7. That'd be your new hodler. That should be your new set of hodlers. People that got into the market in 2017. You understand?
Yeah.
So
they're not. They're not really showing here, but yeah. I understand you.
It just gives you an idea of like the mentality of the shorter term holders, and I like that you have it like that. It's pretty neat, and you compare it to price. See how the price shows up there. Of what and what. Is there? I can't move it. On there, there's a whale ratio.
On the left.
Yeah, there's the whale ratio. Let me see the whale ratio. Right there, it says exchange whale ratio.
Here you go.
Yep. And I'll tell you another thing, the fund flow rate's going to show you a lot too. All right, so we're picking up. That's on.
Look, let me see, because you might want to have it bigger. Okay, here. This goes back to March.
Exchange whale, exchange. Look at your exchange inflow over here. That's going to be another, yeah. This is probably going to be pretty telling. All right. See how you had the big inflow right here back in October 2nd?
Yes.
That's the price point you'd want to pay attention to at that time. Because you're
this
huge,
27 and a half, 28.
Yep. And then see how it picked up again here?
Here.
This last one, price what, 32?
Well, here?
No, the other one.
Higher, like here?
The spike right there, yeah.
36.7.
Okay. So these are starting to tell us like true highs. So the whales are starting to, you get more inflow, right?
Mm-hmm.
Then the price stagnates. Look at the spikes. Now look what happens to the price. Just like you addressed that last one when it was at 26,000 and then it dropped.
Yeah, right here.
So they're putting tokens onto the exchange, and with fear and greed still in greed, and there's your another thing there, you can clearly see who is the buyers of these tokens right now. It's not whales.
It's retail crowd, the happy people.
Yes.
The short term happy and soon to be sad.
There's your other little note for down here at the bottom with inflows up. When you see a spike in inflows like that until it levels out, see, it has to level out. See how it started to level out like October 16th again?
Yeah.
And then it went back up again. We need a leveling. We need it to level out once again. Once we see a leveling out, that means you get the short-term holders out of the way, and then you go on back up again. You with me?
Yes. You wanted, this is actually pretty cool. You wanted to see one more?
Well, I'm trying to see, and like I said, I can't see what your screen says over because our faces are in the way.
Oh, okay. I
want to see funding rates. There should be a thing for funding rates.
Fund flow ratio, funding rates.
Right there it is, fund flow ratio. There you go. Oh, there it is, funding rates. Yep, derivatives. Now, I'm going to show you something really neat to this chart, Camille. If you could, instead of all exchanges, just pull up the Binance exchange.
Okay.
And for days for the SMA, for the EMA, give me a 30-day and give me a 30 or a 90-day.
Mm-hmm. So SMA or EMA?
No, you can do an SMA. That's fine.
30 and 90. So here's the 90. Can I apply more than one? I think it's only one.
No, but what I will show you here is, do you see the funding rate again at that same price where it spiked at that $36,000 number again?
Yeah.
Do you notice that?
Mm-hmm.
And I tell you what, I bought this nice pen for my computer. It cost me $150 plus another 30 something for the charger. And it's charts like this I want to draw on, and I can't draw on, you know?
Yeah.
Because I could circle everything I'm trying to show everybody. So you see the spike on the 19th, right around the whatever this last day of the green spike there. That's your funding spike.
You mean right here?
Yeah, right there. See the funding spike?
Yes.
Okay, so that was your funding spike, and it's showing me price, and that's just Binance, correct?
Binance only.
Okay, now let's go all exchanges.
Here you go.
See, it peaked higher on all exchanges, but Binance will front run. Binance will always front run when the rest of the market's getting ready to peak.
Mm-hmm.
Okay. But one thing of note we have here, we are starting to level this funding rate back out. And you have a midline in the funding rate. Do you see how they develop the midline there?
Yeah, right here.
Where it goes red and then it goes down at the bottom, how it goes red. Okay.
Yes.
So start to look when we get spikes, and then look what happens preceding spikes, which you would come all the way back here to July. See the spike?
Mm-hmm.
See how you got the it's like July 20, it's August, no, I'm sorry, August like 5th.
Yeah, here.
You see the funding rate, how it jacked up right there real high?
Okay.
And then follow what it does. Boom.
Red.
I feel like that's what we're going to do again. We're going to keep the market up for a little bit, and then eventually we're going to take it back again just like that.
Okay.
I can see you. If you want to put your face on there, it's all good, and I can see you again.
All right, here. I wanted to run TradingView for a minute, but it seems okay. It's back on. Yeah. Anything about this? No.
I mean, that's cool. There's a bunch of stuff we could look at, and it could be a little longer video, but we're going to try to keep this thing right around, another 10 more minutes. But you might want to look at the dollar chart to see, since interest rates, since the inflation measures look pretty decent. Since inflation measures look pretty decent, you can see it evidenced in the dollar right now. Which,
getting that curve.
We should be happy, bro. We made that call that the grass wasn't going to be greener at 107, and it pretty much rejected it.
Yeah, 107.
Yep, and
Guys, go
and we
towards
said it yesterday too, or not yesterday, but last week we said this was a bearish arc, and you said leaky faucet.
leaky faucet. You can just see it's bleeding water. It's like, it's bleeding red water here.
Yeah.
Take you all the way to 102.
I got 103.5 as the line in the sand. Like if we lose 103.5, we're probably going to come back to 99 probably.
Okay.
So,
Yeah,
anyways,
yes.
if you're wondering why everything's running, look no farther than this. So another thing to look down there is always keep an eye on your dollar index.
We could have a channel here, I believe. And let's take the one from the bottom. This one is the channel. Okay, so yeah, we're gonna come down here, I think. What'd you say, 103?
I said 103.5. I mean, it was pretty much like the couple of week retest or something like that.
Look how the cloud kept us in. Yeah, never could go. And this is the 10-day chart. I like using these charts that are not for, like, not everybody looks at them. 5-day, 10-day, instead of the 2-week, 1 week. It's just like, you got kind of like a different view. I mean, I check all the charts, but my favorites. Look, we couldn't even get through this cloud. Now, got some support here, but
the indicators are horrible.
Yeah, indicators are terrible, like you say. Fish are about to cross 0. Let me apply AO just for the sake of it. Yeah.
Well, and if I'm not mistaken, we may have fired a TD9 up there too.
Okay. Wait, let me get rid of this. And here. And so let me count it manually, see how good I am with TDs. 4 candles back on this one. 1, 2, 3, 4. Okay, this is 1, 2, 3, 4, 5, 6, 7, 8, 9. I think this one was the 9. Let's see now.
Should be right. It should have fired a 9 there.
Live test. Yeah, okay, this is a 9.
Hey, good job, Camille. See?
Because, like, no, once you know how to count them, you can count them in your head. Yeah. And this was just an ugly doji, a very ugly doji. So, yeah.
But we're still not out of the woods yet, because we've specified it many a times. Anytime your dollar is over 100, your risk on assets still struggle. So don't get too excited.
Right. Okay. So you know how low this can go. Any other chart? I'd like to see the total market cap for crypto.
We broke out of it. I noticed it earlier. We broke out of it, but we're feeding the 9 again.
Yeah, we're already at a 7. So it's actually a topping candle as well. There was some buying pressure here to create this wick, but you don't get dojis just like that. It's usually a trend reversal signal, So we might get a pop, a retrace. I assume the 8 will be higher, and the 9 will be lower, and then we fall back into this channel.
Well, this is where the 2-week would really come in handy, because the 2 weeks going to close this week. Like last week, we focused on our last video. And again, like, follow, and subscribe, guys. Please, we love doing this. And we would like to see your comments, and hopefully we're helping you here and not being too long-winded. But this is where the 2-week charts really come in handy, because now we're going to close this week on 2 weeks. Whereas in our last video, we spoke about the 3-day, 1 week, and 3-day closing all at the same time. Or not 3, but the 3-week and the 1 week closing at the same time.
We did talk about the 3-week, yes.
And now we got the 2-week closing, and we're like, but the 2 weeks going to close on the 3rd week of the month, and it's like people don't understand that. So again, when you really get into it, you got to start following different time frame closures. So the 2-week chart is going to be our most important chart on anything you look at right now. And almost everything, once you would start applying indicators, is showing that they're getting exhausted. A lot of it is, like you can start to see them trying to top here. Like there's not a lot of boatload of room still to run.
Here in the indicator picture, we still have some room, I believe. And what is interesting here, on the contrary, not to be one-sided, is we broke into the cloud. We broke out of this channel, let's say, or this wedge, and we have conquered the 4/1 Gann angle, and kind of going for the 8/1, which is the top of the cloud as well. And there is a note of an inverse head and shoulders.
Yep.
So is that a shoulder, head,
Yep.
shoulder, right? Breakout point, this will be symmetrical. We are in the linear scale if anybody's interested. This is the proper way to do things. Wait, because this is the neckline here. And I have to just make it a normal line without extending it. Then you copy and you paste. You have a clone. You line it up. It could take you up to here.
Yeah, 1/8.
Right there, right there.
So, and that could be your mini blow off, which is if you would apply your fibs, if I'm not mistaken, that should be right at your 70 on the fib, I believe, too.
Okay. Yeah, I know what you mean.
So we should have 3 confirmations on where this mini blow off should roughly
Beautiful. You were right. It is the 70. Just under it.
That's what we're aiming for, guys. That's why I said we're in the last, when we had this video, it was 5 days ago, literally, about the last 2 weeks of love. Now we're in a 2-week chart that's going to close in what? How many days? 4.
4 days.
So 5 days ago, 2 weeks of love, right? You apply 14 days from there. 14 days from there, we're probably looking. So when we made that chart 5 days ago, which today's date is?
Today's the 14th? No, the 15th.
So we made that chart on the 10th. So what would we look like on the 24th is what we're trying to say.
Yeah, let's try to go there.
Then we'll tell you the importance about the 24th, Camille, and why we think this is probably going to be it.
Here is the 24th. Let me draw a vertical line. Roughly the 4th, because I'm on a 2-day chart. So let me go to the 1-day chart.
And it wasn't an exact science. We just said last 2 weeks of love. But
yeah.
I mean,
so let me create a range then with a box where things could go. Possible or not?
Well, yeah. I mean, it's definitely possible because we broke out of that channel, as you say, in the 4/1 GAN. We got a little bit more room to run on the indicators. But you look at shorter time frame indicators, the 3-5 day, they're stretching. And that's why you don't want to get too excited, because we are stretched on a lot of altcoins on the shorter time frames. You know?
Yeah, I don't like that right here. Boom.
Right.
That's not a good sign.
I don't like the oversold. I don't like the oversold on the RSI either.
Let's see the Fisher. The Fisher is at 4.4. That's pushing it. It's about to hook and curl down. And that's a reversal. And we had a 9 on a 3-day. A clear 9 on a 3-day. So we're going for a 13 perhaps on the 24th. You know what I mean?
Okay, and then what's your 5-day look like?
Yeah. So a TD13 on the 5-day, and then we turn. The 5-day like this.
See, we're stretched. We're stretched again. We're still stretched. We're starting to stretch.
This is not a time to buy. If you see this, indicators maxed out like that, a stochastic RSI, RSI above 75, KDJ are already curling, a Fisher at 340, you don't really buy here. Like, this is a time to wait it out. Sell, wait.
But what's the 10-day look like now? See, so now you play into this range where we're going to close in 4 days, right, Camille, for the 2-week. But then all these shorter time frames are showing that maybe this is a deviation. A
10-day has 1 day and 4 hours left to go for the candle close.
Which is going to be nice, because I believe that's also when the 5-day closes too, Camille.
Let me see.
Because now you'd want to start looking at these charts.
Yes, it's true.
So your most important charts now is 5 and 10-day. Wait for the 5 and 10-day to close, then focus on your 2-week. What's it showing us right now? Is this a deviation? That's what you got to say to yourself. Is this a deviation and we visit the bottom of the cloud again?
What I like here is that we have 3 green candles. This is called the 3 white soldiers in classic trading literature. But on the contrary to this formation, the first candle was big, and then we get kind of like smaller candles. So they should be proportionate or getting bigger. There's no clear direction. Icons look okay. Maybe we're aiming too high. I don't know. But you're definitely right that we are stretched, and I wouldn't risk going in a lot here. No.
Wait for the 5 and the 10-day to close in a day and a half. That'll tell you a lot more. it's going to tell you a lot more. And then you focus on your 2-week chart. So like, what's the 2 week look like here, Camille? Again?
Sure. Yeah, let's go. 2 week. Closes in 4 days and 4 hours.
Yeah, and we still have some room to bounce. Fisher's getting up there though.
Yeah, I like the RSI. Got over 50. Is currently at 63, which is not oversold. I mean, not overbought. Yeah, let's just say we have a little room to wiggle here, but
this is the definition of FOMO.
Yeah, proceed with caution.
Yeah, this is the definition of FOMO, where market cap will always generally dictate your blow-offs, you know? So, and we've known that over time. Like one of our first conversations we ever had when we met each other was the igloo structure. And we called the $3 trillion top, remember?
Yeah. So also this line could be important.
For sure. You're not truly bullish until you get above that line.
160.
Yeah. And the significance of 1.8, again, as you say, is that 7 fib level, you know, for the coming back too. And what's the 0.5? Are we over the 0.5 now? You know, we still haven't hit the 0.5 yet.
Yeah, just a second. So
no, you're good.
Yeah, black fibs 0.5. No, not yet. 0.5 is at 148.
And psychological, $1.5 trillion is psychological. Now, what I have drawn up on my own personal one, which you're on John A through Z, I don't know if it's on there somewhere, but I had us peaking somewhere around 1.5 and then ultimately coming back to around, well, you probably don't even want to know. It looks like an ABC to me. A being the
you don't want to know. Don't scare the people.
I know. I got to come in here and say nice stuff. They, you know, when you get a long-term vision of something, a lot of times you can't unsee it sometimes until you can't see it no more. But
so where would you have the other one? Here?
Maybe.
Okay, playing around with power, I see. Well, let's not get distracted.
Oh, so you saw me playing around with power. Now, I don't know if I have it on this one or if it's on my regular one, but anyways.
Retest the cross.
Yeah.
No? Look. 110.
It kind of gives you a clear idea there too on how it's moving when everything's kind of cleared off of there. But to me, it looks like a ABC correction.
So you mean A at the top, B
no,
here?
A there.
A here?
Mm-hmm.
Where it takes you all the way to what? To.
Okay, so you just draw a trend line. Okay, I'll tell you where. Take your low and then draw you a trend line.
Here?
Yep. Up. Keep going. Keep going. Keep going.
Where you want to go?
Yeah,
here?
right there. There you go.
Okay. Right. So
A, B, and then overall it's still it's your GAN. It's your GAN.
Yeah, I was about to say. So let's apply the GAN instead. See what we can notice here. Here, 45 and GAN fan. Cover that.
The only thing I don't like about that is I project it's going to come lower than that.
Lower than here?
Yeah.
Okay, so there's a way around this. Oh. Wait.
Well, see, this is only a 3-day chart. So, like, if you're looking at a 1-month chart, it gives you some more accurate figures or whatever, too.
Sure, friend. Look. Now, I would run the fan from here.
Okay.
If we're talking long term.
Mm-hmm.
So here.
And again, I'm not saying this is going to happen, but now that you drew it like that, you know, we're getting ready to break out long term here too. But and I think you kind of know what I'm going to say number wise, where I think we're going to come to now after seeing that.
Let me make it thicker though.
We like it thicker, don't we, Camille?
So 660.
Yeah, like I'm. Yeah, and look where it rejects that too. Like, look at where you have it drawn at. We're right around $2 trillion right now, where we're at.
Currently, we're at 140.
But look where the top of the fan is there. Look at
Here.
your fan. Yeah.
156.
See, the psychological number. A. Now, if you go A, B, it would be your 156.
See?
Yeah. Oh, probably a little lower than that. I mean, I'm thinking it'll sweep just a little lower than that. But yeah, it could be coming back down the top, test the trend line. Yeah, there you go. Somewhere like that.
Okay.
Yep.
Let me get that here.
Now, am I saying that's going to happen and people's going to prove it wrong? I don't care, because again, I hope it does prove me wrong, because now once we get into that huge channel of it going up, I'm happier than ever. I'm going to keep buying stuff. I'm going to still make money. I'm not going to be like, oh, well, I'm sorry I was wrong,
Who's going to remember that? Everybody will be happy because they're heavy in alts and they'll be making money.
Yeah. But until we truly get over that.
There you go. It's like you can see what was happening here in 2020. This is really nice. Applying these lines gives you a clue.
Mm-hmm. It does.
We write it and then we try to reclaim it. If we cannot, we go to an angle lower. Mm-hmm. And also look here. This is ridiculous. Look where the C crash wick ended up. We didn't break trend because we held 8/1. You see?
Oh, because our faces are in the way.
Okay.
It's all right, but I'm with you.
Look here.
Yeah, still holding long term. Yeah.
That was crucial, and it's the 8/1 perfect on the nose. So yeah.
But we just come back to either retest the lows if we don't get above 1.6. I mean, really, that's key. 1.6 is like uber key,
True.
And when you see it stretched out on the 3 and 5 day charts, and even though 2 week looks good, all the other time frames are showing us that we need, like, what's the 1 week look like with indicators,
Yeah, so just a sec.
That's another thing. And do we hold that 50? There's another thing. Do we just finally bounce around on this 50 before finally moving up?
Just gotta make 2 scenarios here.
Yeah, we could bounce around, retest there, and then it probably would pop hard, and then.
Yeah, probably pop harder than I drew it, because.
Oh yeah.
I'm always a bit timid.
Yeah, you're just playing around, so it's fine.
I'm just playing around, don't matter.
Just gives you an idea. But key is holding the 50. That's the key. Like, if you would see our total market cap drop below that 50, I would exit the market, and this would be verified as a B.
What is this? 200? What's the 100? Just simple moving average.
Yeah, I'd also look at the 20 as well.
Mm-hmm. It's here?
Yeah.
That's low.
But that's not that low. It's really not in the grand scheme of things, because again, if that ends up being a B correction in the grand scheme, A, B, C, that's not too low.
20?
Yeah.
20 is
which is not bad, which is basically where the 50's setting at. So that tells me we're dealing with a cross right now. So if we had a 50 and a 20 there, it looks like we're probably doing the cross.
Let's check on the cross then. 20, 50.
Yep. See, they're pretty much punched in there together. Yep. See, there's the cross.
We got a cross right now happening.
So there's your level, which we've talked about it before we were ever on here anyway, before we were ever with XMO. But 1 trillion was key for moving forward, remember?
Yeah.
And we're kind of still there. Is that where the golden cross is now?
Well, we're at 140 and the level here is 110, 109.
So there you go. And that's the retest you were talking about when you were looking at the 3-day too. So maybe a retest there to see what we got. That level has to hold. There's no ifs, ands, or buts about it. We lose that level, sell everything.
Bull market support bad.
The beauty about this, Camille, is like we're still buying at the bottom if it holds.
Mm-hmm.
Like legit. You see what I'm saying?
Yeah.
Because you just be doing a reclaim like you did here in 2020, where we started the whole cycle over. You know what I'm saying? Like you fell out of the fan, then you came back into the fan, and then
Right here, around here. Uh-huh.
No, right after the red 2020 crash.
Oh,
See how
here.
we're under the fan. And
Oh,
then we
the same line. Yeah. Okay, I get it.
got back into the fan, and then we just crushed to the upside.
Mm-hmm.
So that can give you an idea of how high we can kind of go. But when you got back into the fan, look at that.
55. You think that's attainable?
No, not right now. It's not.
Yeah.
But you could draw just a trend line that give you a little bit better, accurate representation of it, though.
A trend line is more fair in this scenario.
Yeah.
Here we go.
There you go. Still talking. You're still talking. We could easily get up to, and that's where
8, 9.
Yeah. Man. So, guys, we're still at the bottom here.
And this would be, I think, in 25. Yeah, like early 25, mid 25. Okay, that was not that far off.
So, again, we're buying at the bottom here if this holds.
True, that would be beautiful.
But I would still like to see it. I'd still like to see it come back to test that other fan line there around, 7 to 900 trillion, 6 to 800, 6 to 900 billion before we finally take off to roughly $4.2 trillion or something. That's what I would like to see.
Okay, where's that? Where's the 4? 4 is here. So I know what we can do. You remember how you showed me the fibs that go for wave 5?
Yeah. So you take the bottom. You take your bottom, and we should hit a
1.27 something.
Should be
right?
it should be a 1.61.
Oh, for now?
Yeah, it should be a 161.
Okay. I'll take this. I'll stretch it up a little. I don't know yet how much because they're all hidden here. But I need a 1618. And in reverse. Not like that.
Well, you'd have to bring your one down. Yeah, there you go. You'd have to bring your one down to the 3 trillion top. So there you go, 7 trillion. Yep.
735.
Yeah. Well, that would be under a wave 3 theory.
You can get a precise time estimate here. This is the 1st of April 24. No, that seems unlikely for now. I don't think we're.
Well, no, you got a bar count. You'd have to bar count.
Okay.
So what you do is you take
from top to top.
Top to top.
I get you.
You'd have to do 2 different ones because you got 2 top pattern there. And if you can look, like this is still like a topping pattern when you would look at like a channel.
Okay.
So
you have 40 bars, and then let's have another
40 bars from the local top.
And 46 bars.
So just apply them from there on out, from top
43.
to top.
Yeah.
You can break it in half, like you said. There's the one. And there's the other one.
Okay. So
now you can get your numbers following that trend line where we should be at. Yeah.
Well, above here, above the 1618.
Yeah.
Let's go like that.
That's wherever the trend takes us. Because we can still hit we can hit the 231 too.
Okay. Yeah. I know what you mean.
Or the 26. We could hit the 261.
That'll be like high. That'll be like somewhere, in the.
But to find out if that was your true one, if that was your true top, the only thing you got to do, Camille, is from your local bottom here in 2018, apply your fib extension there to see if.
Here?
Yeah, to see if we hit the 161 coming up to the top air in 2021.
I think we will get that. I think I played around like that before, but we'll see.
Because that'll let you know instantly if we've hit wave 3 or not.
It hit this 2618.
Which makes sense. So next call, we should be aiming for the next one up. No, you were right. Keep that on there.
I will. I just don't want all this mess here.
Oh, okay. I'm sorry.
No, it's good. Now we're gonna come back to that.
Yeah, And this should give us our next top. There you go.
7.25, exactly the same.
Yeah.
This is insane. This is insane.
And that's how you figure it out.
These guys, this is crazy. Look how they match.
Yeah. So again, while we always make the comment, you don't need to feel like you've missed out.
Yeah, around here. Now for a time estimate, follow the trend lines. Maybe.
Well, you could just you could ghost pattern it.
Everybody's. Oh, I know what I can do. Look, reclaim this channel. Ha. Reclaim this channel. You see?
Mm-hmm. Oh no, I'm with you.
Vertical. May 25. There is a match. Highlight there. I'm just gonna save it.
We'll come back to revisit it one day, I'm sure.
Yeah.
It's
Just have it in
beautiful.
mind. Okay, guys, I think we should leave you here with this to chew on, ponder what will happen in the next year and a half, and if this could be true or not.
Potentially.
And there is something like the mirror effect.
Yeah. You know, I like my inverse triangles like that. You know that.
If everything goes to hell, we'll see you at 250.
All right, Camille, you got to play nice on here. You can't be cursing.
Oh, I'm sorry. Was that a bad word? I guess.
That's just because I got a pure heart. I can't have bad words around me.
Oh, I'm sorry. Yeah.
Just messing with you. But
I was
anyway,
speaking from a dark place.
yeah, all way to go. Well, I'm here to bring you some light, Camille.
I know.
No, but again, guys, don't get too excited because this could be an ABC correction. Personally, I would like to see it come back to that $500 billion level first before we take off. I think that'd be healthier overall for the markets, personally speaking. And with how the microeconomy still is, I would still like that. I like that you got that one level there because I've always kind of eyed that 500. You know, I've always eyed that 500 billion area.
Yeah.
I would personally like to see it come back to that level first. I think it'd be more healthy overall, and in the long term, it would give crypto a better chance of survival. Instead of, I think sometimes when this thing runs up too fast, it actually hurts the validity of blockchain and crypto. You understand? You with me, Camille?
I understand you. And this is from, like, charts tell it all. You know, the charts have a lot of knowledge that the fundamentals have to catch up to. You know, it could be reverse thinking, but it has proven over and over to be true. So if we see something in the charts that is worrying, it will probably be reflected in real life events. And if we see something promising, well, there is a lot of potential for things to turn out well.
Well, Camille, and I just want to show one more thing, and then we can go. But look, do you see how, like in 2019, the market cap came all the way down where you drew your fib extension, right?
Yeah, right here.
And then look how much it came up, and then it came back down to kind of retest that low again.
Mm-hmm.
And that's what I feel like we're doing.
Okay, that'll be very in line with this whole thing. Let me put a few
percentages there of how much it went up, but then how much it also, and they'll say, oh, well, that was the black swan events, the 2020 crash. Look, listen to me. I can guarantee you, if we were around charting then, me and Camille, we would have probably said there was a potential for this to happen well before the black swan anyway. Right, Camille?
Yeah. Because we would see that
start to form
anyway. that weakness already. And then it had to culminate. Like, this was a fake out here. That was a little fake out, you know, like the trajectory for this down move was culminating here. Either
no
way.
matter what. No matter
what.
Exactly.
Now,
so that'll give a percentage. Does not mean to cut you off. I apologize, but that'll tell you a percentage up from the low, and it'll tell you kind of a percentage down from the top. So maybe we can find a local top here, and then also kind of a local bottom as well. You know?
Yeah. Look at the little box here. It does come up to be around here. I will do that in a minute. Yes.
No, I'm with you. And I've seen a lot of people where they run, like say how you just started your line right there, Camille. They would
Yeah.
make that their zero.
Mm-hmm.
They would make that their zero, and then make like the 69 top one. Or
Okay.
I'm sorry, the top of that, they would make that the zero, and then the 69 the top, and then you would do it the same way on that low right there, and wherever it touched at, that's where it will probably touch at here. You with me?
Mm-hmm.
So like they would made the 200 or 325 billion, they would have made that their one. The zero would have been where you highlighted your yellow line, and what fib retracement you came to will be the same fib retracement it comes back to.
I assume that the wick is a 888, but we can check it.
Okay.
I don't want to say I guarantee it, but it looks like it's the 888. And from how long we've been around these things, then it just seems very likely and very natural. Wait, so not reverse, and let's get to 888.
Look, yep.
Okay, so where's the starting point for? Where's the zero for this rise? Over here?
At the top of that. Yeah. At the top
At
of
the
that
top.
one you did.
Here.
Yeah.
Here? Okay.
Wherever because that's where you started that one, right? At
Yes, yes.
your 0.61.
We broke out of the range.
Yeah.
Boom. And take it to the top. Where's the top? Could be here. 888. This is silly. Look where it is. 888.
500.
490.
Yeah.
No, it's 490 something. Can't even see because I have too many things on here. But hold on. It's just a perfect match. 495 and change.
But again, this is why if this could be an ABC correction, this would probably be more healthier for the market overall.
Yeah.
This is what I would like to see happen. And you'll say, well, why do you want to see that happen? You'll get less followers and all that. No, we're just trying to be real with you for what's probably healthier for the markets.
Mm-hmm.
For long term, because if you want this to be a solid asset and the government to accept it, they want the volatility to be less.
Right. So then on the world stage, or at least in America, we would have to see something spectacularly destructive, and like a bank collapse or any other really bad news will pull the markets down heavily. Are we anticipating any turbulence or?
Look, as long as interest rates stay elevated, even for longer periods of time, it still puts pressure on everybody. And that's new money coming into the market. It's just a lot of different variables. So don't get excited. There's no reason on my final note, and you could add your final note, don't get excited. If we do project it goes up to $7 trillion, guys, there's no reason that you can't breathe easy at night. And if you think you're late to the game, you're definitely not. So when it's time to rock, we'll tell you. But for right now, with the shorter time frame showing some turbulence, if you want to say,
yeah,
just rest easy. Don't be too aggressive. We don't care if, let's say for example, if AVAX get past 22, okay, play it to $28. Swing trade until you see an absolute market structural change. And right now, we don't see that structural change. It's just not evidenced just yet. It's close. It's close. But the bad thing about it is when we get close, everything's maxed out. You know what I mean?
Yep. Take it 4 years back and see where we could be. This is November 23, so we have to look at November 19. Just like November 19. Where were we? We were here. So I'm not saying this is like what's gonna happen, but take a little dip, try again, fail. Take a little dip, try again, fail. Might be.
Yeah, and you don't sweep and you're not going to sweep. You don't have to sweep your lows.
No, you don't.
Even if you go percentage off of that from the 2020 crash to the low there, just percentage wise, and let's say we don't come back to sweep those lows, you're still talking around, the 800 billion range or whatever,
64. You want to take that metric here?
No, I was going to say take it from the low you had over here in 2019 or 2018. And then just go to that wick right there, and that would tell you.
Like up?
Right.
Like here?
Yeah.
Okay,
Yeah.
start here. Go up.
Just go straight up sideways to the bottom of that wick right there. What's
Okay.
that?
19.
Okay, and then apply that 19% to the bottom wick we got now. And that might be the low. There you go.
868.
So if we repeat what we did there, this is what we should come to.
Isn't this 21.5K that, represented in Bitcoin here?
Mm-hmm.
Yeah. That was the line in the sand. That was that was the most important part of the market in early 2023, that price point.
So that's what I'm anticipating to happen just on that metric alone. That could be the C part right there. It could be a shallow C just to come down to 900 trillion or 900 billion and then finally take off,
Okay. So.
And that lines up with previous cycle.
Maybe here. And let's see that. Well, that gave me 38. Yeah. But if we go lower,
that's just your wick, right? That's just your wick. So that gives you a buy zone. So your buy zone there will be 18 to 23,000. Yeah.
Exactly. And this is the top of this range is 19.5. So yeah, it's not out of a question to revisit these prices again.
Hey, we know what's coming up, guys. December's coming up. People's going to be looking for any money they have extra to be able to buy Christmas gifts. So don't be surprised if the markets, we just showed you how the miners are offloading here as well. So don't be surprised if we can't keep this up. And plus, this is an arc. That, as much as you want to say it looks like a parabolic structure, it's still an arc forming. And I probably won't be completely bullish until we really get above $40,000 probably. But I'm bullish because we're above the 111 as well, which I do like that. So
yeah, you said it's important. This line will come into play at one point, one way or the other. Currently sitting at 24.
Yeah.
Well, let's say like here in December, things turn ugly. We could be seeing 25K, and this is another very, very important level to keep an eye on. Because look, because of this. Horizontal levels.
That's where we broke out of that horizontal structure, and we took all that out of there, and that funky, wonky inverse head and shoulders type deal, which still should take us to 42. So,
yep, let's take it here. So 42 right there.
Yeah, so that should be the completion of it, and we'll see what happens once we hit there. But as we stand right now, that's still not much more room to the upside.
Let me, what did I press here?
And what chart are you on?
This is a
5 day
dollar, 5 day.
It's stretched out on the RSI. Everything's stretched out.
Yep.
It's stretched out on multiple time frames, I believe.
Squeeze momentum.
And you should be printing a TD13 on the weekly still as well.
Yeah, let's go there. On the 1 week?
Yeah, should be a 13 or a 9 should have printed, I'm sorry, and then a 13 printed on the 3-week chart.
Yeah.
Remember I showed that to the team?
I remember.
Yeah, 13 printed on the 3-week chart, guys. It just closed last Sunday.
Watch our previous video yeah, you showed it to the team.
And look what happened last time the 13 printed.
Gotta go back and see.
Right there.
Where was it?
Right there. The one before it.
Oh yeah, here. Right.
Yeah.
I'm trying to go back in history. We've never
did it before.
Never did it. And that's an exhaustion sign. Really, exhaustion, guys.
Yeah. And we've had 2 in the last year.
And the aggressive 13 is not like classic 13. This one is a classic solid 13. So take profits on your alts. Now, I'm not saying liquidate everything, but just stay on the smart side, if you're watching this.
And the weekly chart should have printed the 9 as well.
Yeah, it did. We're past the 9.
And if I'm not mistaken, the weekly or the monthly should be coming up on like a 6 or a 7, so it's starting to exhaust too. 6, 7, 8, 9. See, that's a 10 now, right?
We've had a reset, I think. Well, because we never got to a 9, you know.
So how would you read that if you got a reset? You go 4 bars back, and we had to close. So that first bar we got now is at a 1 now that we're on in this month.
You got 4 bars back. So here, this is a 1 because it goes 1, 2, 3, 4, and this is a higher close than the 4 bars back. This is higher than that. This is a 1 and this is a 2. I can switch. Wait, I can switch because this TD doesn't show you. Wait, we had another TD here. Oh no, not in this one. You know, all the TDs got taken off, guys. So that we have the best TD ever, which is the Yada. We're not gonna give it up. It's just holy. And
get the water out, sprinkle it on them.
Yeah. And we don't even have the other TDs. So
I got the one on mine. I got both of them on mine now.
Cool, I know. Yeah, we copied the script. Anyway, maybe we can change the settings here, but I don't think so.
No, I wouldn't change nothing. I was just wondering what, like
1 to 9. It is showing. So it's a 2. I was right? It's a 2. Doesn't show you much, but I can see that.
Yeah.
1 and 2. Okay.
Now I hope you switch it back so don't mess me up.
You want only 9 or 6 to 9 or?
It don't matter. However
Okay, whatever.
As long as I get my 9 and my 13s, I'm happy.
I like to see less, so I'll just put it 8 and 9. And...
Where are my 13? Don't leave my 13 out.
Yeah, 13's here still.
Okay. All right.
Okay.
And then the 2-week chart probably showed some weakness as well. So I mean, when you look at it on the 3-week chart and it's printing a 13, what do you think?
I'm thinking just stay away from this for now. Or I'm thinking get your stable coin cash, wait for the crash, buy it.
Do you think 20? Do you think 25 holds?
For a minute, yes, because that's a huge drop. Look at the percentage drop from here.
31. We need to hold 31 right now.
25 is 32%. I don't expect this to crash lower on the first try.
No.
If we go to from here, if we go to 21 and a half, this will be a 42% correction. So this is a good place to rebuy.
Yeah.
Between 25 and 21 and a half.
Now, what if ETF doesn't get approved? Tell me what you think now.
18 perhaps.
If the ETF don't get approved?
Yeah. What about you?
$9,000 or $10,000.
You're too bearish.
No. This is all being held up by daggone ETF news.
Okay.
Apply your fib retrace. Your retrace.
Yeah, I will. This is also a line we have to respect, you know. So I think here 28, the very strong horizontal level that we've been respecting since, you know, the last bull run here.
Well, in 27,500, you got a conjunction point there at the beginning of 2024 at around 27,500.
Mm-hmm.
You see that where the two lines interject right there?
Yeah, here.
Right there. See? In February. So as long as we stay above 27,500, you know, in February, I would say we're good to go.
Okay. Now, 1, 2, say this was the top.
No, take it up to 42. Take that top up to 42.
Okay. But I like this. Look
okay, yeah, because it lines up at the 618.
Take it to the 42.
If you want, you don't have to take it to 42. It's just that's completion of the inverse head and shoulders.
Yeah, it shows you 18.
18, and what's the next one down?
11, 10.
See, there you go.
Okay, right.
Still not out of the woods yet.
Nope. let's leave it at that. I think we gave a lot of good knowledge out here in this video.
Yeah.
Guys, be safe out there. Enjoy crypto. Patience is key. Sleep well at night. Look at what's running here in the ticker. 0% strategy in trading. That means you invest your profits and you don't care if you lose, because if you lose your profits, you'll be at zero, and that's not a loss. Then the next
Oh
point,
man, that's genius, Camille.
creating a web of orders. When you buy, you can create levels to buy at to catch the wicks. Rebuying versus trailing stop. It's more dynamic if you can move your money around and you're not stuck with a asset. You're not stuck with a trade. Focus on 5 or less assets. Hyperfocus. John is really good at this. So he knows the price levels like the back of his hand. Many times when we talk, he doesn't even have a chart in front of him. He just speaks from his head. So it's really an advantage. Anybody could master, really. It's get to know price levels and how a given token moves. And we talked about much more, which I cannot recall because I didn't put that in the ticker. John, anything to add?
No, like you said, be safe out there. Personally speaking, I exited all my positions except for, again, leaving my profit in. I exited when I saw a TD13 printing, because now that's telling me we're seeing exhaustion going on across the markets here. And this is your perfect time for FOMO to kick in. Now, did I come in and swing trade a few? Yes, I swing traded Zoll and I swing traded AVAX, and I'm going to continue to swing trade. But I'm not going to have probably substantial buys until I see us conquer some levels overall. But I do like, you don't have it on the ticker down there, but the market cap, there is a potential. We have to get past 1.6 trillion on the market cap. Or we could be doing an ABC correction. So that would probably be the one thing I would probably add about that is 1.6. Once we get over 1.6, which again, I think we classified that at the 0.7 level. The 0.7 level was at 1.8. So if we can definitely decisively get over 1.6 trillion, I would probably be more aching to get into the market with the money I pulled out. And last that you could put on here for the ETH Bitcoin pair, there is no clarification yet on which way we're still going to go. We are not in altcoin season yet. Until we get more clarification on the bar pattern for ETH to Bitcoin pair, we will still remain cautiously bullish above 5.051. We will remain cautiously bullish on ETH to Bitcoin pair.
Yeah. Needs to break out of the bar pattern on ETH Bitcoin. Cautiously bullish.
Yeah.
Above 0.051.
Correct.
Let's send it. Okay.
And if you want to finish up there and add something, I have nothing else to add. Hopefully we can help you guys out. Like, follow, comment, subscribe to the channel. Continue. Look, we're here. We're honest. We're genuine. As Camille said at the beginning of the channel before I, came in, but we really do come from a place to where we want to see everyone succeed. We win together, we lose together, but we just want to try to give you the tools to be successful.
We love teaching. I'm a teacher by profession. So as John said, we just want to help out. And we enjoy what we do. So hope you guys enjoy this time with us. Thank you for spending all these minutes. I hope you learned a lot and had a good time. See ya.
Thank you, Camille.
Thanks, John.